You know when a city gets stuck in like a notoriously gloomy weather pattern?
Yeah, where any brief ray of sunshine is just instantly clouded over.
Exactly. It's pouring rain again before you can even grab your sunglasses.
Well, that is exactly what you were looking at in the Vantage Plus weekly crypto analysis published on Monday, March 30th, 2026.
Right. It's heavily focused on this really heavy negative market sentiment.
And your mission for today's deep dive is to unpack exactly why the mood is so incredibly gloomy right now and what that means for the precarious technical floors of four major tokens.
Because, I mean, this weather pattern isn't just your standard bear market blues. There is this massive, almost sci-fi level threat driving the psychology right now.
Oh, the quantum computing thing.
Right. Quantum computing. The fear is that these machines could soon get powerful enough to just completely shatter the underlying cryptography that secures these networks.
Which is wild to think about.
It is. We're talking about the potential unraveling of trillions of dollars in digital assets. But, and this is where I want to push back a bit, when you look at how institutions are digesting this in the source material, the reactions are completely polarized.
Oh, absolutely.
Like Wall Street's Jeffries is advising investors to remove Bitcoin from their portfolios immediately. They're treating it as this imminent, pressing danger. But then Kathy Wood's ARK Invest looks at the exact same data and categorizes it strictly as a long-term risk.
Yeah, it's a huge divergence in perspective.
So is this quantum threat a genuine, immediate danger to network security today? Or is it just, the latest boogeyman traders are weaponizing to justify sell-offs in an already pessimistic market?
Well, you have to remember that during bearish periods, traders suffer from severe confirmation bias.
Right, they see what validates their panic.
Exactly. They fixate on negative data, like this quantum threat, and they just completely ignore any positive milestones. The timeline for quantum computers breaking encryption is heavily debated, but its prominence in today's headlines is absolutely a direct symptom of broader market fear.
And that existential dread is bleeding directly into today's price action. I mean, just looking at Bitcoin trading at $66,639.
Yeah, the charts are looking really heavy.
Very heavy. You see it repeatedly trying to push higher on the daily chart, only to fail at the 50 moving average zone, which mirrors the exact rejection pattern we saw back in January.
Right, because that moving average, it isn't just a line on a chart. It's a psychological ceiling where sellers just keep stepping in to dump their holdings.
So what's the floor holding it up?
The critical floor keeping it afloat right now is that $65,000 zone.
And if that breaks?
If the 65,000 floor gives way, you're looking at a cascade of stop-loss orders. It could trigger some severe downward momentum.
Which brings us to Ethereum, which honestly looks like it's in an even more dramatic spot at $2,002.
It really is. It's resting right on this crucial rising trend line established back in mid-2023.
It feels like standing on a glass floor observation deck, hundreds of stories up. Fascinating, but terrifying if you hear a crack.
Yeah, and every time a trader hits sell, it's like someone tapping that glass with a hammer.
Oh, wow. Eventually, the buy wall shatters, because that 2,000 mark is a massive psychological barrier for retail and institutional traders alike.
Exactly. If it cracks, the technicals suggest a rapid descent. To signal any real upside and actually rebuild trust, Ethereum has to fight its way all the way back across $2,400.
And if the market giants are struggling to hold their glass floors, how are the major altcoins handling all this overarching bearish gravity? Like, look
Yeah.
at XRP. It's trading at $1.3291.
Well, altcoins often act as the canary in the coal mine for the broader market. And seeing XRP with a bearish end-of-month candlestick, that should be a glaring warning sign.
Because the sellers took control.
Right. That candlestick means sellers aggressively dominated the final days of the month, which signals trouble rolling into April. It's clinging to the 50 moving average support around $1.0928, sitting in that broader $1 to $1.20 zone.
And it needs a pretty big push to reverse that narrative, right?
Yeah, reversing this requires XRP to breach $1.50.
Wow. And then looking at Solana here at $82.31, it seems like the $85 support zone has just completely dissolved.
It has. It tested the $70 level back in early February, which might provide temporary support again.
But the long-term charts aren't looking great.
No, they aren't. There's a structural weakness suggesting a potential severe slide toward the $50 range.
I have to ask, though, because Solana traders are actively selling off any rallies within this downtrend, what does that say about market psychology when traders view, any upward momentum purely as an exit door?
It tells you trust has entirely evaporated in this environment. I mean, traders aren't buying the dip to build long-term positions.
They're just trying to get out.
Exactly. They are treating any brief upward spike purely as a liquidity exit. It's just an aggressive scramble for capital preservation.
So we are basically watching a market where heavy bearish psychology is dictating the reality of the charts. It's magnifying every piece of negative news while suppressing any momentum.
That's exactly what's happening.
Which leaves you with this final thought to ponder. If negative news, like the quantum threat, is so easily amplified during a bear market, how much of these current technical breakdowns are driven by actual network flaws versus a purely self-fulfilling psychological panic?
That is the real question.
When you're standing on that glass floor, is the crack really in the glass, or is it just in your mind?